Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning. Hold on. Good grief. What the hell is this? So, like, my mouse don't wanna stay up. Okay. I need to get one of those mouse cord things. Okay. It is Wednesday. Cryptocurrency market got destroyed yesterday, so we'll look at that. And the treasury market continues to be flaky. So, to the charts. E-mini. So E-mini yesterday, we saw, a little bit of a dip after the morning. They tried to recover, but they didn't get very far and then settled down in here. And now overnight, another further move down. So I always say that, like really big drops, really fast drops, don't bother me so much as it is when I see like persistent selling. 2 days now of that. And when we come over into the treasuries, so treasuries were feeling the pressure yesterday as a lot of supply is coming into the market today. 10-year note auction today. But in the overnight session, they moved up a little bit. So I did have that 10-year on. I had to take it off. I still have the spread trade on. And I'm going to get into the 10-year again here, I think. But we'll see. I might have to work it in. So that's kind of where we're at. Things flattened back out a little bit too. You can see they flattened out a little bit. Oil seeing a little bit of movement today. Yesterday they got clobbered, but in relative terms it wasn't too bad, and they're still kind of within the range. Now gold and silver are nursing some big losses yesterday. I got out of gold. I still have silver on, and I'm thinking about dumping that too, to be honest with you. I don't know. I think that for now, it's probably good for me to keep that silver as a hedge. But yeah, silver and gold overnight, not doing very well at all. But of course, the headlines, the big, well, wait. Let's look at the dollar. Dollar's still getting stronger. Okay. The headline yesterday, though, was Bitcoin just getting absolutely destroyed. Look at that, losing 10-20% in a matter of minutes. Lots of conspiracy theories going on, and I just I'm looking at this thing, trying to make sense of it. As I was eating breakfast, somebody said, don't you think it was odd that all of the exchanges go down at exactly the same time? Well, yes, that is odd, but it's also par for the course for cryptocurrencies, that's just how it goes over there, man. What are you going to do about it? I don't know. Seems kind of, well, this is why I don't touch cryptocurrencies, right? But, what to say about it? Some people were saying, this was just El Salvador wanted to do it so that they could get a lower price and buy more. Probably not. Because how are you going to buy more? There's less liquidity. If everybody's locked out of the exchanges. I was seeing some reports that there was DOS attacks. So it's somebody decided to DOS attack all of the exchanges at once. Okay. Maybe that's what happened. I don't know. So I'm just kind of looking at this thing it's too dangerous. It's too dangerous. Uh, you know what else I was thinking about cryptocurrencies? The whole Ponzi thing. Okay, so if Tether is really printing money out of thin air and has made this into a Ponzi, do you realize that means that Bitcoin has never had a bull market without manipulation? That's what that means, right? Like, a little, kind of puts some things in perspective, doesn't it? Yeah, see, the treasuries looking like they want to tick down, but it looks like they're getting a little bit of a response down here. We'll see if they take it again. I don't know. Hey, AO, how are you? Now over here, I can see a little something happening over in the ES. They trying to pull out a recovery here? Would make sense. Well, there's a pretty big gap between buyers and sellers today in ES. So, hey, oh, you know what else? We can turn on our robot. So we'll do that. He did take a trade yesterday. It was a losing trade, but it was he did take a trade. Keller's number one. Yeah, you beat Win. Win must not be there today. I wish I had more to say about the cryptocurrency thing, because like something's definitely going on there, but like we just have no information to work off of. Let's go check Twitter. Let's see if Bitfinex has been saying anything. He sure was tweeting a lot yesterday, huh? Let's see here. Brian Armstrong, they responded by telling us this lend feature is a security. Okay, seems strange. How can lending be a security? So we asked the SEC to help us understand and share their view. We always make an effort to work proactively with regulators and keep an open mind. And then Robert Smith tweets us and says the CEO of a $50 billion company hasn't heard of the bond market. Yeah, Bitcoin is below 50K. Dude, it was like the route that we saw in Bitcoin yesterday was different. No question about it in my mind. It was different. Okay. All of the exchanges went down at the same time, and like every cryptocurrency got hit, which suggests to me that this dip was liquidity based. Yeah. How does that happen? How does every exchange go down at the same time? Coordinated DOS attack? All of the exchanges just agreed to do it? I don't know. That's really freaking weird. And all on the day that supposedly people were all going to buy $30 worth of Bitcoin. Well, how did that work out for you guys? I wonder how many people actually went through with it, or how many of them said, well, not doing that anymore now that we're down X% or whatever. Long's getting curled. Well, there was definitely long liquidations for sure. But like, I don't know. It could be as simple as buy the rumors, sell the news, and there was a big whale out there that sold the news. I don't know. Because you see, there's a win. How's it going? Because yesterday was the day that El Salvador went over to Bitcoin being legal tender. They were saying, I saw something to the effect that McDonald's was accepting payments through the Lightning Network, and I was like, really? Really? Because the Lightning Network is still experimental, to my understanding. You really think that McDonald's is going to do that? Prove it. I'm skeptical. I'm skeptical of that one. I'm very skeptical of that one. ES has been fun. Well, if you've been swinging that thing and having success, then good for you. What was it? I tried on Sim 3 times yesterday, and they were all bad. That can happen to you sometimes, though. It's very often I don't know what the deal is, what causes me to do that, but like if I'm trying to buy the dip against a strong trend, it's like as soon as I give up on it, that's when it bottoms out. Always works out that way. Well, I'm still seeing the treasuries do seem to be keeping an eye on the E-mini to some extent. So there's that going on, which is interesting. No, you closed your... Oh, that's right, because you were short. Well, today is going to be interesting if they buy the dip today or not. Since the pandemic, they would buy the dip today. If the E-mini continues to be depressed or whatever, then we might have some larger concerns on our hands for the month of September. Yeah. Chinese Transport Ministry says it will crack down on illegal behaviors in ride-hailing industry. Wait, Vietnam government approves mixing doses of Moderna and Pfizer vaccines? Okay. That should be an interesting one. Anyways, so I was saying on Bitcoin with Bitcoin, because this was looks like a liquidity induced pull, crash and everything. I would expect that they recover it quickly. Just note though that the market is kind of doing a tightrope balancing act, and if there was to be further bear action in the cryptocurrency market, because did you see yesterday Tether printed $2 billion? So are you telling me some fund just come up with $2 billion out of nowhere yesterday to buy the dip? Okay, like they've got a problem over there, and if it goes much lower, I don't think it will, but if it went much lower, could be a real disaster in Bitcoin. It doesn't look like much else going on here. I didn't really check Zero Hedge. Well, actually, I did. I did check Zero Hedge when I woke up this morning, and didn't really see a whole lot of anything interesting. Bitcoin shaken after Coinbase CEO slams SEC for engaging in intimidation tactics behind closed doors. That doesn't sound like intimidation. I'm going to bet that the SEC is more concerned about protecting consumers than it is about using quote unquote intimidation tactics. Okay. I'm going to side with the SEC on that one, because the SEC has been like pussies about this. Yes, the robot is enabled. They fell another 2.5%. Well, they fell a lot yesterday. I know that. So they were down Okay, let's read the Zero Hedge story. As if the crypto world wasn't hit hard enough yesterday with a sudden vacuum drop lower in prices across all major coins, that's a correct description, it appears U.S. regulators may be getting a little more aggressive in their actions and not just words. Some really sketchy behavior coming out of the SEC recently. That is the first sentence in a lengthy Twitter tirade from Brian Armstrong, the CEO of Coinbase, as he revealed last night that the securities regulator had threatened to sue over the crypto exchange's new lending program. Good. If they're doing lending and it's against the law, they should be sued. As Cointelegraph reports, Armstrong explained that the crypto exchange approached the SEC earlier this year to brief the enforcement body over the up-and-coming Coinbase lend program that intends to offer 4% annual yield returns on deposits of USD coin. Stablecoin. According to the Coinbase CEO, the SEC responded by telling the firm that the lending program is a security without any explanation and threatened to sue if the service was launched. That does sound like a security to me. That's a bond. Like, right? You do lending like that's a bond. They refuse to tell us why they think it is a secure, because it's fucking obvious, you moron. Is this for real? Is this guy for real? This is the CEO of Coinbase? Seriously? They refuse to tell us why they think it's a security. Instead, subpoena a bunch of records from us. We comply, demand testimony from our employees, we comply, and then tell us that they will be suing us if we proceed to launch with zero explanation as to why. Winston says, Paul Grewal, the company's chief legal officer, said in a blog post, Coinbase would delay the launch of its lend product until at least October as a result. Yes. Okay, Armstrong pointed out that there are other crypto firms on the market that currently provide a similar lending service to their customers and called the SEC to provide regulatory clarity on the topic. Yeah, just because everybody else is doing it, man, the cryptocurrencies, the world is like the Wild West. The CEO's SEC's actions, if Armstrong has reported them accurately, appear to be bad news for competitors BlockFi and Celsius, which already offer crypto yield products. BlockFi is facing investigations in a number of states over its high interest products, as well it should. And man, that is just, look, am I being like really is my bias against cryptocurrency in general clouding my judgment on this particular issue? It is insane to me that the CEO of Coinbase doesn't understand that selling something where you basically you're doing a bond, you're basically providing people a bond with a stable coin. They don't understand that that's a security. Like, what? Does the SEC have to explain what a bond is to you? What? Oh, now I understand that tweet that we read earlier from Bitfinex, where there was like, oh my gosh. The cryptocurrency platform BlockFi in July to stop offering interest-bearing accounts that have raised $14.7 billion from investors. Yeah, well, like, think about this. They're basically paying you to give them your stable coins, and they're going to give you a 4% annual return back. A stable coin that is supposed to be based on dollars. What are they doing with that money that they're able to provide people back 4%? Like, right? Does it make sense? How? You got a stable coin. A stable coin is supposed to be something that is one-to-one backed with dollars. So you go and you give them your dollars, and then they give you the stable coin. Then you go and give them the stable coin, and they give you interest on the stable coin. So at the end of the bond or whatever it is, at the end of the year, essentially, you make 4% interest on it. And what are they doing? Imano says they're making markets. AO says they're trading. Correct. Which means they're using your stablecoin dollars to purchase other securities. Do you not see a problem with that? Because what happens when they're making markets and something like what happened today happens, or let's say it's even worse. Let's say that it's not a liquidity-induced drop. Let's say that it is something bad happens when Bitcoin and everybody just sells. There's just a stampede for the exits. What's going to happen? That little stablecoin fund of theirs is going to collapse. They're going to lose money, and they're not going to be able to pay people back the 4%. It's a security, and what they're doing is like they shouldn't be able to do. My Coinbase was hacked and my checking account cleaned out. Coinbase won't even speak to me. Buyer beware. Wow. Well, I've heard a lot of complaints about Coinbase's customer service for sure. No, they make markets. They make more than 8 to 12% spreads during crisis times. They may have massive spreads, market neutral, fully hedged. Bullshit. There's no such thing as completely market neutral. Hold on a second. Listen, my whole shtick is limit order books and market making. And I know how these market making algorithms work. You can hedge yourself, you can minimize your risk, but to say that it is completely market neutral, zero risk in it, absolute horse shit. If there was a large drop in the cryptocurrency market, if the cryptocurrency market dropped 90%, you're not getting that money back. There we go. Gary Vee had a video about how we got to stop using banks. Well, okay, so here's the problem that as I see it. Okay, there's this whole thing where it's like you want to buy things and you don't want to carry cash on you all the time because you don't want to have to be carrying $2,000 in your pocket or however much it is that you make a month. And so you put it in a bank, and then the bank provides you a savings or credit card that you can then go out and use to make purchases. And then the bank takes that money that you're using and they lend it out to other people, right? So there's, it's okay to like do lending and go and do stuff with that. But there are regulations around it. So the SEC coming in and saying, well, you have to follow the regulations surrounding it. That's absolutely appropriate. Maybe after they get all of the, they correctly say it's a security and they get all of the regulations, they're following all the regulations and stuff, then maybe they can do their lending thing, right? I'm one of the most underrated YouTube casts, so thank you. You know what? We were doing really well the first quarter of the year. We were getting 50 views a day, and then all of a sudden it mysteriously dropped to 24. And I don't think that has anything to do with us being underrated or anything like that. It's just YouTube is not driving as many people to the streams, and I haven't done a very good job at promoting the stream outside of that. So I need to work on that. Anyways, so I was talking about banks, right? Okay. So the bank, it has this tremendous power, this tremendous amount of money by being a wallet for everybody, right? So does a service where it's some sort of semi-decentralized ecosystem where everybody can get a checking account where they can put their money in it and not have to give the money to the bank, would that be useful to society? Absolutely. But there's a problem. The problem is this. Finance is really complicated. Okay, finance is really complicated. People still need to have loans. People still need to invest money on various different time horizons and risk tolerances, and managing these sorts of things and providing these sorts of services is like really incredibly complicated. So the idea that the banks can just like not exist anymore is just absolutely ridiculous, right? And the idea that regular people would manage these things themselves is absolutely ridiculous. Like, just try teaching people how to price a bond. Like, it's there's something about the math that is just like naturally confusing to us. True numbers will be the true followers will find you. Well, yeah. Well, I think that the majority of the views that we get are people that are subscribed with the bell notification icon set, and you're here every day. So, for channel popularity, discuss hot tickers and YouTube shorts and lace it up in descriptions. Well, I kind of wonder though, if we picked up on, you know, some sort of trending keyword or a security that was popping off that day, I'm not sure that we would get the traffic like we did before, like we did during the GameStop thing. Like, I think after the GameStop thing happened, that YouTube changed the algorithms so that the streams don't get as much views because it was killing engagement or something. Or no, they changed the algorithm for some reason. Yeah, agreed. So then here's your next problem. Is you move everybody out of, like, nobody's doing Wells Fargo anymore, right? Nobody's doing Wells Fargo anymore. How does a company like Wells Fargo survive anymore, right? You know, like a company like Goldman Sachs or Morgan Stanley, where the majority of their clients are corporate clients anyways, that's different, right? It's not going to affect their business at all. But banks, where they rely completely on consumer lending, will completely disappear. And then at that point, how do you provide consumer lending services like a credit card? Right? Like when the US dollar, what do we call them? Central bank digital currencies. When central bank digital currencies come out, and nobody with a half a brain would ever want to go and put their money in a Wells Fargo account, what is Wells Fargo going to do? I'm actually, I don't know what Wells Fargo does now. I can't believe that anybody still uses them after all the shit they've pulled. Futures are just options without Have popular partners? Maybe. I don't know. Like here's the issue is that, like, I want the channel to be more successful because I feel like that would help you guys more. And I would like to be able to get to the point where I was making enough from the YouTube that I could spend, you know, the majority of my time doing that instead of having a regular day job. But at the same time, I'm mostly interested in trading and the other things that I'm doing. And so it's kind of like, you know, meh. Well, a lot of the things that I can do, you know, I could totally throw off all principles and just say, hey, we're just going to be a shameless promoter of X, Y, and Z things and tell people to buy whatever the hot stock is, like most of the big time guru channels do. And, you know, just always be bullish and tell them, don't worry, you're in this security, or like gold. Okay. Yes, you're down on your serval position. Just huddle; it'll be okay in the end. It's all just the manipulation by the big banks. They don't want you to be in gold and silver. Just hold out, guys. Right? Like that's the sort of thing I could say. And I'm just kind of like, meh. Like I don't care enough about it to do that sort of a thing. You can outsource all this. Well, yeah, that's another good point. I could start paying people to promote. If I came across the right person that had a proven track record of being effective at promoting a stream, which I don't know if a person like that really exists, because wouldn't the person like that just have their own live stream and not be offering services like that? I don't know. But if I found them, I would probably be willing to pay for it. I don't. Well, so that's the thing, is that I'm not willing to do anything that would ever possibly, cross any rules or lines. And one of those hard lines for me is making claims about how much money people are going to make. That's the way that you do it, is you say, this one strategy will make you millions of dollars. Da, 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 da. I made 74 times my money last week. That's what like gets people. Absolutely not. That's not allowed. That's, in my opinion, illegal. A movie star has a manager and a publicity agent, 2 different jobs. Yeah. Yes, I need the YouTube equivalent of a publicity agent. I think so. You're probably right. No, man. I've been in the silver as kind of a hedge, and so far it's been doing its job really well. But I'm not so sure that it's one that I want to hold on to anymore. I need to think about it. But I might lighten that position up at least. Bank of America has that market cornered. Well, I tell you what, what you can do though, the big thing that you can do to help is when I do the regular uploads, like that Gary Norton video. Watch the video, give it a like, leave a comment. That helps the channel out more than anything. That engagement on a video, that's the biggest thing. I don't know if the live streams necessarily, but like the one-off videos in particular, when those get released like that first day, if you watch the whole thing, like it, and leave a comment, I tell you what, if I released a video, well, so I'm still, you guys said that you wanted to see like my daily routine, which is going to be like, I wake up, I eat, this is what I eat, this is how I work out, that sort of a thing. I don't know if you understood that when you voted for that option, but I think we're supposed to do it. Because it's either that or should you trade futures? Okay. If all 24 people on this video, or that are watching right now, when I release a video on Monday, if they all went and commented on that video, like it would help the channel like crazy. Like 25 comments would be insane. That would instantly that day give the video like thousands of views, and it would very easily get it up into one of my most best performing videos, right? Like, I think my best performing video, the one about trading computer hardware, had like 2 comments on it the first day. So like, that puts it in perspective. 24 people engaging on it in the comments on a channel would be a big deal. That would be like, oh, people like this. YouTube would start showing it to other people, and it would grow the channel a lot. I guess I don't do a very good job of engaging people with the comments. Like, making content that makes people want to comment. But I love that trading hardware vid. Loved it. Good. Yes, you did, David. I recall seeing your comment, actually. And I should go and see if there's any new comments on it today. The treasuries here, they're kind of slowing down, so they decided to tick up to the other side. And then it just kind of died down up there too. So for the time being, it looks like that nobody wants to move. Nobody wants to move. Devin Nash has a new video, unmotivated streamers, huh? See, that's the perfect. That's like, I want to click that so bad. I need to get more videos like that. Oh, we did get a couple. Oh, see, Imano, he left a comment. Oh, if you want more views/hits, you may have to sprinkle in some YouTube shorts or small length videos in your channel. Yeah. Well, okay, and what's this other one? Oh, the Power Toys. Yeah, you know what, Caleb? I'm actually unfamiliar with that, but I've never tried playing with it. But I don't have to, because all of my windows are pretty much set up the way that I need. And I do have a few little utilities that help me do it, like to snap and stuff. But do a poll. You want to do another poll on the E-mini? Let's do it. Let's do it. Where is the poll? Create a poll. ES opening hour up, down. Let's see here. One guy I watch, Weenie Trades, has a cat that he always has on camera. Plus, he has his fancy with him every day, and she is frankly pretty cute and friendly. Dude, if my wife had the time to be able to come and join me on the stream and talk to you guys and be like my risk manager sort of a thing, that would probably help the channel. My wife she's I wouldn't say she's in super great shape right now, but that sort of thing doesn't matter. And I think that she has just such I don't know how you put it. She's the kind of person that it's like everybody likes her. You don't necessarily notice her. She's not the one that like stands out and gets all the attention, but everybody likes her. My ex was the one that stood out, but half of the people hated her and half the people liked her. Controversial personality. Do you think that trading is a scam and that no one is doing to make money in the long run? No. It's not a scam. A scam is the wrong word. What would be the right way to describe this? The majority of traders lose for a reason, and the efficient market function kind of relies on a majority of the participants basically being noise. The market needs that noise for the informed traders and the market makers to do their jobs. Without that noise, and the problem is just that the noise, if you're trading noise, you lose money. What I think would be the optimal thing is that if you traded noise, that you would come out break even, and that most traders would just come out break even. I don't know how you fix that, because I it's largely because of the spread that happens, but that's the problem. Miss Speculator Seth is likely an ISFJ. Perhaps. He's saying session wear away. So that's another one of those things that's like, okay, like if I was on CNBC and the costuming department said, Seth, we're going to give you a different wig every day, I would totally wear it. But I'm not going to go out and go and find a wig. I don't care. What would you consider noise? When I say noise, I just mean orders that have absolutely no no meaning to the market. Like they think that they're trading off of something that matters, but their order flow in the larger scheme of things doesn't matter. It has no predictive value or anything. As opposed to the informed trader who knows has a piece of information that is going to ultimately move the market in a certain direction, right? Do you think that non-HFT people can make the same return as HFT physical ARB? Well, you can make returns without being an HFT. The statistics of your returns aren't going to be the same because an HFT is much more of a fat-tailed distribution. Like it's something that works most of the time, and maybe you have 1 or 2 days a year where you lose when you're doing HFTs and market making sort of strategies. But there are still edges that retail traders can take advantage of. In particular, being informed. Being one of the informed traders, that's an advantage because markets are not informationally efficient. The ladies I know who wear wigs, even as fashion accessories, say that wigs are really hot. Oh, I bet. I mean, they make your head hot, perspire more, and your head doesn't get any air. Probably. Well, me being bald, it should just be like regular, but it would probably take a few days to get used to it. Retail has a hard-on for HFT, just trade longer time frames. Well, I think my audience in particular has a hard-on for HFT because we're doing scalping. Like we want to do short-term trades. We want to do something that you're going to come out with a profit most days and that you could make a living on. You know, like swing trading, kind of a little bit more difficult to make your sole living on, right? But maybe it makes more sense. Maybe it makes more. I think that you probably, if you came over to the micros and tried to swing micros, you probably have a much better chance of making money than trying to scalp the ES, for instance. But maybe I'm wrong. It seems like Ace is able to do it somehow. I don't know how well he does recently, but AO says he doesn't think so. But you swing. If everybody, I'm saying, if all futures traders, if all retail future traders gave up on scalping and were trying to swing positions like AO, I think that the failure rate would go from 95% to more like 75%. Yeah. So I think I've drawn this before, but oh man, I don't have any room to do anything. I just have to draw it over everything else. I'll do it in this area, this little blue area right here. You would think that if your trading is random, that if you were to look at all traders, they all took one trade. All traders, they all took one trade. What is the distribution of their gains, right? And you would think that it would be a distribution like this. A Gaussian distribution centered around 0. And 50% of them would make money and 50% of them would not make money. But the reality is that because of the spread and because you lose the spread, or if you're market making, the risk of adverse excursion actually means that the distribution is more like this. Right? That's the difference between the spread. Here would be 0. Here's the difference between that and the spread. So that most people lose, right? I would venture to guess that this amount right here in natural is like 65%. 65 to 70%, right? But You also have to consider that this distribution is fat-tailed, and once you start taking multiple trades, then this distribution becomes fat-tailed. So then it actually becomes more like this. Right? And this is how we get only, this would be 75% right here. This area is more like 60, 65, and this area is more like 70, 75%. And then you add on top of that the people that are trading just don't have any kind of edge, and you end up with 95%. So like when you look at the numbers, the majority of traders should fail. Like that's just the way that it is, and it will always be that the majority of traders in a zero-sum game with a spread will lose money. Okay, but it shouldn't be 95%, right? Do you think that TT provides limit and orders data that has a more accurate time template? I don't know. I would venture to guess that there's probably a similar amount of error. There's other things about TT that are nice though. About their data that is nice. How is a market volume order reconstructed to match a limit order in TT? Well, your data provider doesn't do that, right? The exchange does that. Yeah, so good point, AO. The JOLTS is at the top of the hour. That's an important piece of news for us. I don't know if it's really going to affect it typically doesn't affect the markets that much. I bet you that it's going to show that there are a lot of job openings and that people just aren't taking trades, or just aren't taking the jobs, taking trades. I've only used TT for order routing. But you realize when you submit an order, your futures commissions merchant just sends it to the exchange, and the exchange is where they get matched, right? And then the platforms, they all match that. Now on orders, that is like accurate. Like there's a one-to-one relationship between what you see in your platform and what happened on the exchange. Okay. Level 2 changes, there's not. Level 2 changes, your data provider has to filter that. And the level 2 changes and the order matches aren't going to be 100% synced. It's just impossible for it to do that. And it's not, like I do wish that the exchange provided timestamps. I really think that it would help, but probably their reasoning, I'm going to bet that their reasoning would be that you wouldn't be able to, your clock wouldn't be synced. So you would think that you were getting orders from the future or something like that, which to me, it's like, it doesn't matter as long as I can correlate up the level 2 changes correctly so that I know for sure whether it was a buy or sell, or if they just changed it so that when orders came through, they showed you market orders instead of limit orders, and they showed you whether it was a buy market order or a sell market order. That would be another way to fix it, but fist bumps in advance for everyone who hit the like button. Thanks. It's a good 13 likes is good for this early, so thank you guys. Why were some people going on about VIX? I don't know. It didn't look like the VIX moved all that much to me, but I don't think it really matters for us who do not auto trade. I think you're right. But NASDAQ trader is really focused on being super fast and accurate, and so he thinks that maybe if I can find a way that is more accurate, that I can find an edge in there in that. But it's noise. The difference is noise. What do you mean by level 2? I mean like the depth of market, the changes in your depth of market. I heard that SC, Sierra Charts, will do direct market access via iLink soon. Oh, really? So you mean that you can do? Oh no, wait, via iLink. I forget what that is. Okay, let's see here. Yeah, that alone doesn't make much sense, other than that you would be sending the orders directly to the gateways, maybe? I don't know. I'm not looking for an edge in there. I just want to make my data less inaccurate. Well, like I said, like the inaccuracy of it is very, very trivial, and the difference between the two, I do not believe creates an edge. Okay, Dave, what do you think of footprint candles for trading versus the DOM? Oh, okay, cool. So you're saying that they're going to give you the market segment gateways instead of the convenience gateways? That would make a difference. That could make a difference if you are like automated trading. This is what for NASDAQ trader, if you're doing a robot, using the market segment gateway versus the convenience gateway would make a difference, because what happens with the convenience gateway is the convenience gateway, you send all of your orders to this convenience gateway, and then the CME routes it to the correct market segment that it is. So if there were two traders and my broker was connected through the market segment gateway and your broker was connected through the convenience gateway, and we sent our orders at the same time, I would be more likely to get filled than you, because the market segment gateway will go through first. So that would be interesting. Okay, anyways, to Dave's question. What about using candlesticks versus the DOM? So the big thing that you got to remember with the DOM is there are limitations. Like we like to pretend that it's like the perfect way of trading, like that's always the way that we think. It's like, okay, charts don't work, but the DOM, it's perfect. It's not perfect, right? The DOM gives you the best, most accurate picture of what has happened and what is happening, right? There are often situations where you really just don't know what is going on without that order flow data. All these retail traders, they want to look at price and explain what was going on. But, what happens if there's a 4 tick spread and the orders are just bouncing across that 4 tick spread, right? You're looking at price. It might not be immediately clear that that's what's happening, especially if you don't know anything about order flow, right? So being able to see all of the limit orders, what the best bid, best ask was, and whether the market orders are buy orders or sell orders, you have to have that information to really understand what happened and why it moved the way that it did. Okay. Now, the footprint does give you some of that information. It's not quite as complete as if you were watching it on the DOM, but it's pretty good where, like, if you're watching it on the DOM and then you have a footprint chart over here and you would look at the footprint chart and you go, oh yeah, okay, I remember this and I remember that. Okay. But the footprint chart will also lure you into making what I would consider to be fallacious assumptions about things. Okay. So, like, because something happened at a specific price in the past doesn't mean that something is going to happen at that specific price in the future. This concept that when I see a particular setup with a volume in this particular situation, it tends to work out in this way in the future can be a incorrect assumption. Okay. That would basically be trying to apply technical analysis to order flow, right? we got to remember the thing that you are trying to predict is future orders, right? So what would cause future orders? What if the JOLTS jobs numbers were like really, really awful? What if they said that the number of open jobs out in the market was like ridiculously low, right? Excuse me. This market would sell. You would see a lot of sell orders come into the market, right? Okay, that would be something that we could possibly predict future orders off of, right? And does the fact that so much traded in this location, or that there was an imbalance in this location, does that accurately predict future orders? In my experience, no. Okay, so I would say that footprints are useful, but a lot of the kind of analysis that I see people try and do with footprints is not going to help you. Makes sense? Should have just said that at the beginning instead of going on that line. I'm winded. I feel like I'm not getting enough air. Which brokers use the market segment gateway? Well, I didn't know that anybody in the retail industry provided market segment gateways. I thought that all of the retail guys were through the convenience gateways. Here again, it probably doesn't matter unless you're running a market making algorithm, right? Like if your position in the queue matters, then using the market gateway versus the segment gateway versus a convenience gateway can make a difference, right? That's the difference between you getting at the front of the queue and you being at the back of the queue. But you'd have to have a fast connection too. So, but if you were like co-located, and you're going through the market segment gateway, then you might be able to play that game. Might. So ABC123 Trader was sending me a message, and one of the things that he was saying was that not everybody that watches necessarily wants to be a trader. This is a really good point that I forget a lot. Is like some of the value that I can provide is I'm on the front lines so that you don't have to be, because you're most likely to lose money. And I don't claim to always be making money. Like that's the thing, is that I can come in here and I can afford to lose a little bit of money every day, and it's fine. It's not like a significant change to my life or anything like that. Like this money is set aside for trading, and I assume that I'm not going to see it again, right? So, but when you're watching the order flow, you get insights into what's going on that other people don't see, because they're not watching the order, so they really can't understand why it moves the way that it did, right? Now, the question is just, how do I provide that value to other people more effectively so that they see the benefits of it, right? Why would I allow some schmuck to read my orders and front run me? Why are you saying that? Advantage Futures is one that I know. Oh, that's interesting. Yeah, in futures, they're not going to be reading your orders and front running you. Lucas, good morning. I see U.S. Treasury yields volume are still shit. Yeah. You know what? Yesterday it wasn't bad. It wasn't bad, but the thing that I find really odd was that Fed's Bullard came out last night in some speech in Europe or something that even though the jobs number was bad, he still wants to taper as soon as possible, basically. And there was like zero response from the Treasury market. So does that mean that it's just already priced in that they're going to taper? That it's like a non-news event? Or is it just like nobody cares to speculate in the Treasury yields anymore? Or what? Like, I don't know what the deal is with that. But it's freaking was weird to me. The move overnight a little bit higher in the Treasuries probably because of risk off sentiment. Which, by the way, means that if the E-mini opens and it's bullish, that probably the yields will come down quite a bit. Or sorry, the prices of the Treasuries will probably come down quite a bit. Vincenzo says, make an indicator? What? Yeah. You're not going to get front run. It's just you want to get at the front of the queue, right? Like the whole thing with the market making is say I'm here in the Treasury and say we tick down, right? Like there's a very clear reason that we ticked down. Okay, like maybe there's a correlation. Like the way that these usually work is you'll look at a correlation. You'll be looking at a bunch of other instruments and you'll be calculating what the Treasury should be worth from those instruments. And so if there's a really clear reason, like if we're watching the DOM here and they tick down at 04 and, you know, almost immediately there's 3,000 contracts sitting there on the offer, that kind of suggests that the market makers think that it's a good offer there because of something in another instrument, right? So if it ticks down at 3,000 and you're a market maker, you want to be at the front of that queue. Just in case a few orders come and hit back, you want to be the one to pick those off, right? So in that situation, those people are really, really fast, right? So if you were like co-located and you were using the direct market segment gateway, then over here in the Treasury, maybe you would be, you know, 1,500 in line instead of 3,000 in line. Maybe. I don't know. That's kind of where it makes a difference. Oh, didn't you ask for a way to provide value? Well, so it's not make a flow indicator. I think I know how to provide the value because I can come in here and I can say, okay, we had this move and it appears to be based off of this. We had this move and here's the best series for this, right? That's where I think that should be really useful to somebody that's like a more general investor, right? The problem is, how do I get them to realize how useful that is what I was saying. Is that like some people, they will see that, and because it's not like, okay, you should buy Apple and Google and this stock, because it's not that, they just go, I don't care, and they move on. Even though what I'm sharing with them is probably more valuable information than giving stock recommendations. You know, like I can tell you that over the past day that it appears that flow related to risk off sentiment has been more indicative of where the market is moving right now than flow related to expectations that the Federal Reserve is going to taper. It seems like that the market doesn't care about the taper anymore. Right? That I think that's something useful if you're trying to manage a portfolio. My mouth is dry. I've been talking a lot today. You said something before. I wonder why firms like Citadel are not buying order flow in futures market. What keeps that aspect of the business away from futures? Yeah, sure. So the reason that it doesn't happen in the futures market is because your orders are sent directly to the exchange. It doesn't necessarily work that way in stocks, right? In stocks, they there's like a trillion different ways that your orders can actually be processed and filled. So one way that you can do it is you can send it directly to the market maker, like Citadel, and then they do it. You get you see what I mean? People like the easy way to trade, so if you tell them about charts and technicals, they will grab it. Yeah, that's exactly what it is, AO. You know what though is here's the funny thing about it though. Isn't it simpler to come in and say, okay, the jobs number was this, and the market moved this way. This thing happened, and at that time, the markets were doing this. Isn't that more simple than going in and saying, okay, you take this price divided by the price 5 bars back, and under all of these conditions, like that's just like, that's all of this technical math mumbo jumbo that sounds really smart, but in the end doesn't really tell you anything that you might not know just from looking at the orders, It's kind of a more of a fundamental approach, and I feel like that it should make more sense to people. That's why I think that there are a lot of people out there that are so-called successful traders that think that they're trading off of technical analysis and really aren't. Right? Like I really think that they are interested in markets, and they're watching the news, and they know the sentiment and the risk rewards behind certain large market moves, and they're trading off of it, and they just don't realize it. We know that's not how the markets work. The Dom explains it all. Yeah. Well, and to get back, the key thing is that you have to realize that there is, because of the way the liquidity works, price doesn't really tell you very much, right? Like, well, for instance, let's talk about the jobs numbers on Friday, right? Hold on a second. Yeah, there was a good little sell there in ES just now. Just about 2 minutes before the open. We'll see what they do. Okay, anyways, on Friday, when the news happened, there was a big buy in the sorry. Yep, that's right. There was a big buy in the treasuries because that number was bad. And then a little bit while after that, there's a liquidity hole, so they come back. And then a little bit after that, there was some really strong selling, like really aggressive, large orders coming in and selling that. So what are we to make from that? I'm still not sure, but I think that it was an important thing. It might have been some people getting stopped out. The thing is that if you look at a price chart, you look at it and you say, oh, well, there was a big spike, and then it kind of came back and it was only slightly lower than it was, right? You wouldn't say, oh, there was something really significant about that move. Like it was a really bearish move after that, right? But then you come in on Monday and all of a sudden it's so much lower, and we're basically like at the lows of the month all of a sudden. And then you go, oh, okay, right? Like if you were just looking at price, you would have been late. That one wouldn't have made any sense. You would have been like, well, why did it move? Why didn't it do that move before the end of the weekend? Because nothing changed over the weekend. So why is it lower, right? But if you understand that the orders are what move the market and that the price is not informationally efficient, then you know that, okay, there could have been some significant flow because they believe that the market should move lower, but price just didn't get there yet because of liquidity concerns and stuff, and they didn't want to continue trading on a Friday, But not everybody needs to understand that part. if we're going to trade it, we can understand that part, and we can gain an edge from that, just because then we know, okay, orders are what I really want to pay attention to, and I'm not going to get a whole lot from analyzing the price. I think that's a big edge. But I still think that the best edge is being an informed trader, right? There's no truth behind it. We just cook a story after a move happens. Well, I mean, the what kind of orders come through matters, right? It does matter. It doesn't mean that the price that the market has right now is correct. That's the mistake that people make, right? Orders matter. It tells us things about the market, but that doesn't mean that the price that they came up with after that is what price it really should be. That price truly reflects like true value. Yeah, it looks like, well, so I need to minimize this. It looks like that so far on the initial move that the order flow is a little bearish. That's just the first one, so wouldn't be too freaked out about it. But also note that the yields did kind of take a tick or two lower. So some orders matter. I would say most orders are not informational. That's correct, Caleb, for sure. So how do you determine which orders matter and which ones don't? Because one of the things that people would, or theories out there, has been that, like, well, if it's a large order, like I saw somebody on Reddit the other day and they were saying, well, you want your DOM to show, man, they had Sierra charts up, and I could not understand what they were looking at, because they were putting all these numbers, like they were saying there's 702 at this price, and like there is no 702. The number 702 does not show up in the picture you posted. Anyways, but they're saying big orders. If it's a really big market order, then that means that it's informed. Well, not necessarily, because it could be a firm rebalancing or hedging themselves, right? So there might not be informational content in it, even if it's a big order, right? I'll give you a freebie though. If the market maker pulls, or the market maker stacks after a price change really quickly, why do you think that he's doing that? He's doing that because he saw something correlated in another instrument. So that flow is more likely to have informational content behind it. That's why in the treasuries in particular, I really, really pay attention to when limit orders just pull out of the way, because that means something. Although what it might mean is I don't have enough information right now to really feel strongly about trying to hold this level, or taking fills at this level rather. Scan for large block orders on ES and notice in which direction it was sent. Well, we might be able to say it may well be the case that a large market order has a higher probability of being informed, but you still don't know for sure. Still don't know for sure. But another way that we could know that an order is informed or not is if we can see it correlated to a piece of information hitting the market. If I hear over my news squawker or see over Twitter a significant piece of economic news, and I see orders come through in the market, then I can assume that those orders are probably coming in, that those orders are informed. Just don't make the assumption that what you're seeing over here right now accurately predicts what kind of orders are going to come in the future. Typically it doesn't. It's a very, very limited amount of prediction that you can do just from like that current market state, right? But what you can do is you can say, here's the current market state. So if orders came in this direction, it might affect this way or that way, right? The informed orders are generally put in. How do you know that? How do you know? There could be some, so maybe there's a situation where you saw, well, this happens all the time actually, is we'll see a bunch of orders hit the market, and both us and the market makers seem to be confused about why that flow came in. And then a little while later, we find out that a certain thing happened and we just didn't find out about it until much later, right? That happens. But then we can still kind of after the fact kind of try and correlate up the flows with the piece of information. Learn how market makers make money. You guys are saying a bunch of different things here, and I'm not quite sure how to respond to all of it. So remember that the way that a market making signal works is if oh my gosh, my mouse just switched on me. If you were to get at the beginning of the queue and you just always took fills, then on average you will make money. You will make the spread per trade. And there's a lot of strong math behind this, but you have to account for the probability of informed trading. You have to account for if this flow is all coming against you and you're going to get the adverse excursion, you have to pull your prices, right? So market makers then combine that information, that kind of a model with like a correlation. So like when we were making stocks, I'm more familiar with how they did it in stocks at Goldman, right? How did they do that? They would go and they would say, okay, here's a company. Here are all of the assets that it has. Here are all of the money flows that it has. And here are things that will potentially affect those money flows. For instance, if we were looking at the stock of a large bank, then we can come in and we can say, okay, this bank owns X much in mortgage-backed securities. So if the interest rates rise, then those mortgage-backed securities are worth this much more, right? And ergo, the price of the stock should change this much. And so I'm going to change my best bid, best offer to be this based off of that piece of information, right? Like a lot of it goes down into that, which is kind of funny because then you go, oh, well, hunt for those signals. Well, that's all information that your broker doesn't give you, right? Or, I mean, that you're not going to see if you're just only looking at one instrument, for sure. You know? HF says, wish I was trading today. Why? I don't know. Yeah, we get these jolts at the top of the hour might be interesting. It looks like the E-mini is turning bullish, and the treasuries are falling back down. I bet we could see 133 again today. But yeah, now there's this kind of this question, which is like, could there be an abnormality or statistical aberration in the order flows themselves that could potentially predict future order flow? Well, supposedly yes. It's very difficult to find those, but supposedly yes. I have one that I think is a thing. But we're back testing it still. But the theory behind that one is that overly directional flow can predict informed trading and thus a higher probability of a move going your way. We want the Sethicator. Well, I think that the best thing that you're going to get for the Sethicator is the inventory cost basis, right? I don't talk about it enough, but the inventory cost basis can be a very useful tool in some instances. So can you see here, when we look overnight, they come up to where the shorts are getting stopped out, or, past their break-even point for the day, and that's kind of where it halts, and then it comes back down. And when it comes back down, where does it bounce off of? It bounces right off of the shorts cost basis. So it gives you kind of a moving target sort of price level that will tell you where potential support and resistances might be. That can be useful. I don't know if I've tried doing some trade tests where it's like when it comes down to that line, you just want to reverse there at that line. And those statistically didn't work. So I think that there's too much of a possibility of it like coming here, then bounce, and then look, it came through it, right? But if you combine that kind of information with like what you actually know about the market to say, okay, well, we're bullish, market should be up today, since we're coming back up, since we should be moving up overall, but at the moment we're coming down, then this is probably the place where it's going to reverse and I want to buy it. Sethicator's funny and ironic, right? And the way that indicator tries to calculate that is it looks at where market makers picked up orders, essentially. It kind of does a scenario where it's like, if I was a market maker and I was responsible for every limit order that hit the market, what would my average position be? Best case, worst case scenario based off of when I took profits and stuff. That's what that's doing. Most of my other indicators are just showing you the flow. Oh, so like another example. This one right here, right? This is showing me the imbalance in the limit orders. This is showing me a short-term imbalance in the market orders and how directional it is. And this is just showing me how much autocorrelation there is in the price movements themselves. Which I don't know. I have some data that suggests that can be a thing, although I suspect that it's only a thing in this current market regime with QE and all that. Right? Well, then my other things are like, here's a spread. Like, what do I really have these charts up here for? Spreads. Here's the spreads in the treasuries down at the bottom. All of the instruments. What's everything doing? What's the dollar doing? Really important. That's more what my indicators tell you. So when you think an institutional market maker is buying, it might be hedging a transaction that is going against him on a different market. Well, when I see order flow, you might be conflating two different points. Point number one is that market makers tend to use information derived from other instruments to determine if they really want to take fills at that price or not. Okay. And they're relying more on current information. It's current information to try and price, because it's like arbitrage, right? So market makers, to some extent, they're kind of doing an arbitrage strategy, right? So that was one point. The other point is that when I see flow, like especially if I see market orders, or let's say I see an iceberg, an iceberg would be a great example. I see an iceberg at a certain location. Does that mean that there is a large buyer there that knows something and that I should heed that? No, it doesn't necessarily mean that at all. Doesn't necessarily mean that at all. There's no way for me to really know, especially if it's an iceberg. In fact, I suspect that icebergs are more likely to be hedges. At least that's been my experience, is that the market ignores them. Oh, I missed the first part of his comment. Well, I think that's a very hard way to go about, since market makers also hedge their positions across a variety of markets. So when you think an institutional market maker is buying, it might be hedging a transaction that is going against him on a different market. It's true. Yeah. Well, that's just where, like, it comes down to there's kind of like a couple of different levels of this, right? The highest level of this is that you should be getting out of this is this. Markets are relatively statistically efficient, which means that it's very difficult when you're just looking at price to differentiate the stock market from a random walk. There are very narrow exceptions. For instance, how volatility tends to cluster, that is different. But to a human in particular, it's just noise, okay? But the market is not informationally efficient, which means that there can be a piece of information about the future trajectory of interest rates, for instance, that isn't properly priced into the markets, right? So when you know that information and you know how the market should be priced based off of that piece of information, then when you come in and you see flow that is contrary to that, that flow, that doesn't necessarily mean that your theory is wrong. It could just mean that somebody has to rebalance or hedge, or there's no informational content behind it at all. It could be. And so what I tend to do is I'll wait for that flow to subside and then take it the other way. And assuming that I really understand what's going on, that I know all of the information that I need to, then in net, over a large amount of trades, you should be able to pull an edge out of that. That's kind of the higher level thinking about it. But to understand what the market actually thinks about a piece of information, when you do know the information, you have to be able to watch the orders. That's why the DOM is so important. DOM is the best way to see that, because I can come in and I can see how all the limit orders are changing, where the market orders went off at, the pace of it, everything. You know, I can see every individual order change on the DOM. No other way to do that efficiently, I think. New contract on September 13th? Well, I'm not sure what you're talking about. Not for here in the futures. These ones, these go until the end of the month. And these, oh, maybe in the E-mini. Yeah, I guess the E-mini hasn't switched over yet, has it? I forget when it is. Salim showed me that he took a little bit of a loser today, but it was a small one. It was a small one compared to yesterday. So no big deal, right? Yeah, red 95, but I was playing red. Yeah. Well, it sure does seem like that today's market has, continues to be pretty tight. So those interest rates, they moved quite a bit as the E-mini got above the open. Now the equities still look like they're struggling a little bit. Although I wouldn't say this stopping at 45.18 didn't look responsive to me. It kind of looked like it sputtered out. They got stuck in a little hole there at 17 and dropped it back down. So we got some pieces of news here at the top of the hour, right? Yeah, we have a 10-year auction today, which makes for some icebergy action. Although I haven't really noticed too many large icebergs here, have we? When I'm coming out and I'm looking at this, I continue to see very high correlation with the 6J. Also, gold is just getting absolutely pummeled right now. Gold is getting absolutely destroyed. There might be some preparation for the JOLTS number. You know, the JOLTS job number is not typically a super important number. Expectation is 10 million, by the way. But maybe in this particular instance, it will be. We'll see how the market reacts. So will they pull for it? Find out here in 8 minutes or so. Yep, and you can see now the E-mini back below the open, and the treasuries came back up quite a bit. So I can, you know, this is where for correlations. So like right now I'm looking at it. What does the market maker think matters? Well, it thinks that the 6J matters. And if the 6J matters, then that typically means that people's risk appetite matters. So that seems to be the correlation that they're trading off of right now. Oh, when I said, you know, if you guys go on the most recent video and leave comments, that it helps it out a lot. And a bunch of you guys went and commented on Gary Norton's interview video. Thank you so much. It makes a big difference. So we'll see. Like, I bet you we come in here and where's the analytics for that video? Let's see, is it still getting a good amount of views? Yeah, it is. It's still getting like 50 views a day. That's good. See, so here it's got a good little run, and now you guys all commented, and it's gonna be like hopefully I bet you we'll see a little bit of a bump, pretty likely. Well, here while we're waiting for this news to come out, let's just check the news a little bit, see if there was anything that has happen. Robbo, the street can't resist buying things that have gone down. Yeah, I bet. %85% of high yield bonds have a negative real yield. Really? That's one that I think we'll have to read later, but not too important at the moment. The Evergrande bonds stumble after report of technical default. Contagion seems China property market. That could be bad. That's the one. I don't know if that's really going to affect the U.S. markets, but you know, if we see a headline that comes out and the E-mini like really reacts to it, then we start paying attention to it, right? Excuse me. Well, Yields moved a fair bit there, but I don't know if it matters or not. Maybe on a normal situation, I probably should have taken that 36.7, but I don't know. I really think that I'm trying for a longer term trade here, and I really think that in the long run that the rates should increase. You think I learned something new? Well, I think we all do, right? Gold looks like it's bouncing now. So how bad did silver get hit from that? Oh, it got destroyed. Bounced off of 24 in silver. Yep, and copper not. See, seeing gold move the way that it is and the bonds not move is kind of odd, right? That's one of those places where I think that the treasuries might not be as informationally efficient at the moment as we think, because the gold and silver seem to be reacting to it correctly, but the bonds aren't for some reason. But there must be a theory that people are trading off of over there that I'm not aware of, for it to be that, because it's been like this now, well, since last Friday. Let's see, U.S. Treasury Secretary Yellen's letter to Congress. Financial Juice has a crypto Discord now. I'll tell you, that's another thing, is if I just became a cryptocurrency YouTuber, I probably would get lots of views, right? Like, I posted a TikTok about the cryptocurrency crunch yesterday, and immediate 1,000 views or whatever. Okay. Another good little bullish spurt volume there. Oh yeah. Well, when you look at the cumulative deltas and everything, look at that. That looks good. Scratching too many trades. Well, I've been trying to let my trades run, and I'm feeling a little frustrated for sure. Just for some reason, the rates seem really reluctant to rise, even though, like, every piece of information that I have out there kind of says that they are going to rise. Yes, yesterday everything short ran back into my stop. Oh, really? Well, I got stopped out of my trade in the 10-year. I was pretty unhappy about that one. There's an iceberg at 02 half. Oh, that's right. The ECB tomorrow. Ooh. That could be something. Yeah, it's pretty big. Somebody buying there at 02 half. Yeah, yesterday on the 10-year, I had a couple of times where I was up plus 10, and I probably should have just taken it off on that day, but I think on that one, when I was leaving and we didn't have a huge profit on, I should have closed it. Okay, I'm not seeing polling for jolts, so I haven't heard the news, but I do see a little bit of movement. Okay. So the JOLTS job openings were slightly better than expected. So E-mini seems to like that. Yep, 10.93 versus an expected 10, right? We're also getting the Canadian central bank statement, but the E-mini really liking it. So the overnight high was 45.21, which is just a small little hop and a skip away. Okay, so it looks like our longer rates moved pretty nicely off of that. So we are getting some of our steepening back. Not much, but some. I'm wondering, because again, what do we know in the 10-year that's important today? There's a auction today, right? And we often see icebergs. So seeing that 55.79 at 0.2 half just before the news that we had is a little odd, right? I'm wondering, so was that where somebody was hedged and they wanted to stay there? But then like if we get a larger move or they get below 133 even, will that cause a little bit of hedging action? If they were already trying to rate lock up here. So it's very rare that on the auction day that I see like the rate locks like really move away from them, but when they do, it can be like some of the craziest stuff. That or the auction comes out at the number comes out at a completely different price, and that screws them up too. I don't know. So right now the E-mini is backing off of the 45.20. Inflationary influences are projected to be temporary, but their persistence and magnitude are unknown and will be constantly studied, says Bank of Canada. Here again, market makers were signaling a push upwards before jolts was revealed. Yeah. Well, in that kind of an instance, they don't necessarily know what the jolts is going to be, but they'll place their bets on it, and sometimes they're right and sometimes they're wrong. On that one, if the jolts had come out and had been less than expected, just because of the activity that we saw before it, you would know that you probably would have gotten a stronger move if it had been less than expected, right? Okay. 0.5 being nibbled at a little bit now. And I do see the 6J in the right spot. Maybe one of these cases where when the treasuries do fall, that it'll just kind of like, you don't see the strong order flow. It's just like the bids pull and you're like, what the heck? The bankers who have access to CIA and NSA data don't know something in advance that doesn't. Do they have there are traders who have access to CIA and NSA data? I think that the reality is that you can use available economic information to make pretty good guesses and bets about how the numbers are going to be. Alligator says sleeping market getting out. Okay, we saw a pretty big block buy there at 02, which is really odd. Well, I mean that's a little too conspiratorial for me. They don't need access to CIA and NSA data. You can just use publicly available information and study it and come up with a model that has a pretty good chance of predicting what the number is going to be. You know, like on the jobs number on Friday, I knew that it wasn't going to be 750 because Goldman cut their forecast to 400. Of course, the number that we actually got was still like way lower than my expectation, but do you get what I mean? But they're still taking a bet. They can still be wrong. They are wrong often. Otherwise, it would be like the order flow going into the news would always predict what's going to happen, which we know is certainly not the case. It is interesting to me though that the gold and silver move happened, you know, a good 15 minutes before the top of the hour news. We do have some more stuff today, don't we? I thought there was something at 8:30. Yeah, maybe not. Oh, yeah, we do. New York Fed Treasury purchases tips 1 to 7.5 years. Okay. I used to read CIA intel on the Bank of Japan. Really? At a bank? Somebody really wants to buy this so badly. Why? When you were working for the NSA? Sure. There would be other things illegal with trading off of that, but wouldn't necessarily be insider information, but it would be like, I don't know. I'm pretty sure the NSA has rules about what you can do with that information, right? You'd get fired if you find out if you were trading on it. That kind of information doesn't serve. I don't know about that one. What's going on at the central bank can tell you a lot about what's going on in the country. I'm sure, though, that there are a lot of informed traders out there that insiders that do know what certain releases are going to be to some extent. Sure. How you would differentiate those orders from the rest of the market, though, is you can't know. So I'm a little torn here about what's going on in the 10-year, because there was some pretty strong flow there at 02, and it has pushed us up a little bit. I would say it's like 500 lots or something. So that doesn't necessarily mean anything. And it could be based off of the auction, so it may not necessarily have to be something that tells us anything long term, but it is not something that we can ignore. It was significant flow, so. I wonder if it's just going to be sleepy until the auction. Well, this might be, I don't know what's going to get us through the next hour, boys. The treasury kind of looks like it doesn't want to do anything for us at the moment. Oh, that was a good little downtick. I don't know. The E-mini probably will continue to float up. So again, if they can get to like 45.22, then they'd cross an overnight high. Well, let's not call it overnight high, because it's more like the last swing high. There's still some highs like 45.25 and stuff, but yeah, we'll see. There you go. So there it is again. Like they kind of ticked down at 03, and it ticks back up, and the bid is pretty strong. And I'm not sure where that, it must be, that could be a correlation from like the German bonds and stuff like that. Or it could be rate locking behavior. Floating up is NG. Oh, really? I do see that like silver and gold did bouncing okay. So it's maybe not a complete disaster there in gold. Lost $10. That $10 in gold is still a lot. Still a pretty decent move. You know what? The one that has the most volume, relatively speaking, according to my metrics, is like the 2-year right now. Apparently is like really up there. Oh, it dropped back down. Okay, that was weird. Oh boy, El Salvadorians are already having their identities stolen to get the free Bitcoin on their accounts. Oi. Oi. Natural gas rises at 7-year high in New York. Well, I do wonder if this, if the trade over here in the treasuries is like a stagflation trade still. Although if it was stagflation, shouldn't the yields be moving up? I don't know. What's Nate saying here? I've said before that I didn't think it was obvious that greater caution towards COVID would come to be the liberal position in the US. It certainly was not, in my opinion. This is one reason why people avoiding in-person contact tends to hurt the community services and cultural amenities that liberals usually like. MTA bridge and tunnel crossings are at 115% of pre-pandemic levels. New York transit use is at 50%. This transition towards a more car-dependent region is putting a ceiling on job growth and creating more pollution and traffic deaths. Well, what Nate Silver says there about, well, that's why they show more caution, that wouldn't make any sense, because it would seem to me that liberals would be more interested in opening things back up again so that they can use those services. I don't get it. I don't get it, Nate. I'm sorry. I don't get it. Caleb says blazing the trail for central bank digital currencies. There you go. Oh man, how would you do that? How would they? I think that if the United States, I don't think that the United States should make a central bank digital currency where they like create the wallet for you, right? It should be if you go in and you use your social security number, you can create a wallet. And then you would have to do some sort of a verification procedure to prove that, so for you to get a stimulus check or something like that. That's interesting. The market maker in the yields here is willing to put a bid up at 363. And actually tighten the spread in the 10-year, even though nothing's happening over here in the 10-year. I called the lawn service guy who said his wife has COVID. He is not working now. I've called it the 4th or 5th lawn service now. No one has enough employees to take on new work. Really? Wallets have already been created, if I'm not mistaken. I never read anything about that it would create wallets. I think that it's all still in development at MIT or whatever, right? Here you go again. Pretty strong bid. A little bit of shoving into 03.5. Maybe because of the 5-year there. Is the 30? Okay. So the spread is still steepening, it appears. I bet you, though, that if we are as lucky as to get another down move in the treasuries, that the spread will increase a lot. Like you should see this 30-year just absolutely plummet, and the 5-year kind of be lackadaisical about it. What is this? Oh, there are 10.93 million U.S. jobs openings in July, and there is 8.7 million unemployed Americans. So there are more job openings than there are unemployed Americans by over 2 million. Patrick Rooney says the SEC needs to find a way to curb payment for order flow. Yes, it should just be illegal. It's not clear whether payment for order flow reduces costs for retail investors or simply makes their costs less transparent. Agreed. I think it really does just make their costs less transparent. You know what would make your costs more transparent is if there's just everybody had direct market access, like they do in futures. The writer is a former chair of the U.S. Federal Deposit Insurance Corporation. Securities and Exchange Commissioner Gary Gensler has cast a long-needed spotlight on the practice of brokers selling their retail orders to makers of markets. That's a weird way of saying selling their retail orders to makers of markets outside of regulated public exchanges. Typically, these are dark pools, private exchanges run by large financial institutions or wholesalers such as Citadel and Virtue that execute orders internally. Critics say payment for order flow, or PFOF, represents an inherent conflict of interest, sensibly observing that brokers should be writing orders where they can get the best price for their customers, not the best deal for themselves. Thank you. Supporters argue that payment for order flow benefits retail investors as market makers are required to provide prices that are better than quotes displayed by regulated exchanges. They add that the broker profits from payment for order flow, allow them to offer commission-free trading. Who needs it? But it is far from clear whether payment for order flow actually reduces costs for retail investors or simply makes their costs less transparent. By allowing market makers to attract order flow with a bribe, not a best price, payments for order flow gives them every incentive to hide the true price at which they are willing to trade, probably leading to poorer execution for retail traders. Thank you. Unlike market makers on public exchanges, dark pools and wholesalers are not required to publish and stand behind quotes. When they pay for an order, they have the discretion to trade against it or send it to an exchange. While exchange market makers must improve a published price by a penny, there's no such requirement for dark pools and wholesalers, which can and do improve price by tiny fractions of a cent. Okay, so I just picked up something there that I hadn't thought of before, is that what it allows them to do is it allows them to hold a bid or offer out there, and then if the flow comes in and they don't like it, they can just pass it on to the exchange and not do anything with it. So it's basically like a limit order that every time an order comes in, you can make a decision about whether you want it to be filled or not. That was messed up. Okay. While exchange market makers must improve a published price by a penny, there is no such requirement for dark pools and wholesalers, which can and do improve price by tiny fractions of a cent. Thus, payment for order flow affords them the luxury of not having to compete on price to draw order flow and to step in front of those who do with minimal price improvement. This reduces competition, but it also creates disincentives for others to publicly expose their trading interest, knowing dark pools and wholesalers can so easily and cheaply jump ahead of them. Yes. The relationship of payment for order flow to price and quality was vividly illustrated in a recent enforcement settlement brought by the SEC against Robinhood. In that case, Robinhood explicitly agreed to accept less price improvement for its customers in return for a higher payment for order flow. The inferior executions given to those Robinhood customers may well have exceeded any benefit from not paying a commission. Long ago, the UK's Financial Services Authority wisely recognized the harm of payment for order flow to market quality and integrity, in effect banning it in 2012. A study conducted by the CFA Institute of UK Markets found that absent payment for order flow, markets were more liquid and pricing improved for retail investors. I would agree. Listen, if it all goes to the exchange, the market is going to be more efficient, period. The reason is simple. When market makers have to compete on the quality of their public quotes and are rewarded with trades at those quotes, they compete more aggressively. Incentives are aligned. Uptick at 0.3. 5K iceberg there to do it, though. Well, when I come back and I look at cumulative deltas and everything, it seems like a mildly significant amount in the 5-year, but not anywhere else. And it could just be the spreading here going on that is causing this little move here. So I should also note that well, maybe not. It seems like that the yields should be a little bit lower over here, but maybe not. Maybe I'm wrong. Okay. Ironically, Bernie Madoff of Ponzi scheme fame pioneered the use of payment for order flow in the 1980s, arguing to the SEC that it would increase competition for exchanges then dominated by the NYSE. Exchange market share has indeed shrunk to barely half, but concentrations have accumulated off exchange. No, it's better on the exchange, guys. It should be public. Wholesalers now account for 38% of U.S. trading volumes, mostly dominated by 7 firms. Market share for retail orders is even more concentrated, with Citadel accounting for 47%. This market dominance brings tremendous advantages for Citadel, including a privileged first look at retail order flow, a force that increasingly moves share prices, as we have seen recently with GameStop and other meme stocks. Gensler has said a number of market structure reforms are on the table, including banning payment for order flow. Yes, please. That may be difficult, as many free brokers might start charging commissions again to make up for lost revenue. Okay. This would be unpopular with retail investors who also vote and make political donations. However, the return of commissions is not a foregone conclusion. Brokers such as Fidelity are able to offer commission-free trades without resorting to order flow. Oh, yeah, that's probably true. But how does Fidelity make their money then? From their funds? I don't know. Payment for order flow serves another reminder to all regulators to scrutinize schemes purportedly benefiting the little guy. Thank you. History is replete with them. Madoff will be forever remembered for his multi-billion-dollar Ponzi scheme, but the more impactful legacy may be the damage to investors from payment for order flow. Let's hope the SEC can find a way to make things right. Yes. It's so true. Any time that I come out and somebody claims to be working for you, you got to be skeptical. Like, remember there was this exchange where they were saying we have like this, like 100 yards of fiber optic cable in a coil to make sure that nobody has a ping advantage over anybody else. The only reason that you wanted that was because the bank had a advantage over your smaller bank. It wasn't because of you or me. We still get screwed. But everybody was all over that one. They're all in agreement. It's such a great idea. It's a good story. I wish I could upvote it. Maybe it is on Reddit. We'll see. We pay commissions using futures. We do. That's what I was saying, though, again, is that, like, if you were able to take out the commissions and the spread from futures trading, then retail traders would be a lot more 50-50. It would be it might seem like a small change, but it would have a huge impact. But I don't know if that's really possible. 100 yards. I don't know how much it was. They had a certain amount of cable like sitting there that supposedly would increase everybody's latency by 50 milliseconds or something like that. So that having that super fast advantage didn't really matter. My nose really itches there, but I don't think there's anything there. I think it's just all in my head. Jobless claims in crude oil inventories tomorrow. We still got this 10-year auction today. The 10-year auction is going to be important, right? One thing I didn't note that I should have noted at the beginning of the stream today was that the treasuries seemed to be under pressure up until the European markets closed, and then they moved up. So that kind of suggests to me that the pressure is coming from foreign entities, which gets kind of interesting because it must have been more than 100 yards then, Caleb. You have to go back and read the thing, but they had like a huge coil of fiber optic cable. Anyways, it kind of makes you some of the past auctions have had strong foreign demand. So that kind of makes this auction interesting if that's what's going on. But you continue to see here, well, the E-mini has fallen back down. So this probably risk appetite continues to be risk appetite why the treasuries aren't falling. This is what it seems like with that one. I am surprised that they still didn't make it up to the 22 area. You need to make a video on Jigsaw? What do you mean by that, Ayo? Just like one of the things is like I could come in and I could tell you this is what this means. But like Jigsaw has videos like that. Probably would be popular if I made a video like that though. Because of when I made videos kind of along those lines on TikTok. I kind of did the test pilot on TikTok for that sort of stuff and it did really well. So there probably will be an order flow basics video on the channel. I really love that chalkboard back there, but I don't think I can have it in here forever. The Fed has hinted it's going to taper. I think it's almost certain that they're going to. Like Bullard was like, yeah, I know the jobs number was bad. We're still going to taper. Like it's not just that they think that we've made enough progress that we can taper. I think that some of the dynamics that they're starting to see now are suggesting to them that their asset purchases are causing more harm than good. That because their asset purchases overheated the housing market, that people pulled back from building things and people pulled back from buying houses, and that hampered the recovery. And if that's true, then you would want to take care of it as soon as possible, right? The benefits of using that compared to charts and TA. Yeah, how do I want to do that? I don't know. Like one of the things about that AO though is that kind of is like an edge that we have that maybe we don't want everybody to know, you know? Volume profile. Well, I don't really use volume profile anymore. Like just to be honest with you, I've tested a couple of setups that people talk about with volume profiles and I didn't find any edge in them. I think that volume profile is making the same kinds of technical analysis fallacies that just because there was order flow in a certain location in the past does not mean that there's going to be order flow in the future. What we know about the news and models about how funds are set up and things like that, I think are going to be much more predictive of future order flow than what you see in the volume profile. See, another 2 ticks up. That's holding a good bit at 04. Interestingly enough, the Japanese yen is actually a little bit lower. So where is that coming from? That has to be coming from the S&P 500. And since that is a new low for the session, yeah, it is definitely risk-off sentiment. Couldn't get an edge with volume profile either, but I think it's true that the price gravitates to the point of control. Well, so I think the thing that I think is really funny about volume profile is that from what I can see, these points of control, like if we are even talking about a local point of control, like this one at 45.11, it's not a magnet, it's a hole. A magnet would mean something like there's something really attractive about that price that people really like. It's actually the opposite. It's like everybody that wanted to trade there already did. There's no liquidity there. There's more liquidity over here and over here. And so they kind of like get stuck, because if you get too far this way, there's too many buyers, and you get too far this way, there's too many sellers, and they get pulled back into it. When you think about it from that perspective, I think it would kind of change the way that you think about it a lot, right? Because now all of a sudden it's like, oh, okay, that's not necessarily like tell me anything about what the market thinks about the value there, right? Then especially because if it was the case, then shouldn't it be that you would never want to take a trade unless it was below that or whatever? Like, you know what I mean? Like, why would anybody trade then? They all agreed. Why would there be a lot of volume there? There wouldn't be. Right? You got 12 points back in profit. Well, look at that, 4,500. In treasuries, okay, so now I'm definitely seeing it where I took my trade. Yeah, okay, they're a little bit higher and I'm still like even. So it seems like there's maybe a teeny tiny half a tick divergence between the yield and the treasury. I could be wrong. So don't see any news or anything that suggests that the E-mini should be moving down. It's just kind of been doing that. In correlated markets, movement will not mirror volume profiles in each. That says a lot. Yes, because the market makers are pulling. It's again, like you really cannot make sense of price movements without factoring in both the volume and the limit orders. Trading Floor Audio tweeting, consensus was expecting the BLS to report a print of 10 million in July job openings. Nobody was prepared for the shocking 10.934 million job openings. Yeah. Because if you don't have to work, why would you? Why would you now? Although jobless benefits just ended for some people, so I don't know. Well, it's pretty likely that 4,500 will kind of become a little bit of a hole too. That one they're actually gravitated towards. There's going to be a lot of people that are like, 4,500, I would love to buy or sell that. Okay, you know what? I feel like I need to use the bathroom, so I'll be right back. We still got about 20 minutes. No, so this is interesting. So the ES is still getting pummeled a bit. I don't know. So the order flow that I'm seeing right here doesn't look like end of the world yet. Actually, it looks like they're trying to buy the dip right here. Could be wrong, but it looks like there's maybe some dip buying there. And treasuries aren't moving. They're still where they were when I left them. Palladium getting pounded, says Patrick Rooney on Twitter. I bet metals are getting, gold getting hit a little bit. I mean, the issue, one of the things that I find confusing still is that it seems like the negative bet here is like a bet on stagflation, but if you were betting on stagflation, shouldn't gold and silver be going up? So Alligator also seems to be think that some of what's going on seems to be a little off. What's this? Brannigan Barrett, note the sell delta. ES. Oh, that's Bitcoin. Oh, somebody's selling Bitcoin hard. That's what he's saying. That could be something worth paying attention to. So it looks like there are some big orders selling at Bitcoin right now. Wait, what the hell? This is catching this tweet by Paul. Incredibly, newspaper reports still claim European welfare states have high unemployment. Okay, the employment rate for Denmark is higher than it is for France and the US. They might. I wonder how that data is compiled though, because like which unemployment rate are we talking about? You know, there's like a bunch of different ways to get that number. What do you think? You think this continues in ES? People are rethinking their priorities and where they live now. I agree. Well, like I'm going to bet you that a large degree of the unemployment comes from people that are either in school or women. Like it's probably people that don't absolutely have to work if they don't have to, which just kind of reinforces this whole thing that like, oh, you know what, if we stuck to the stay-at-home mom thing, you guys would probably be making more money. That you don't actually get more money by having both parents work. Not when that happens at a societal level. Okay, well, that looked like a fairly significant downtick in the 10-year. It does look like they're I'm gonna try a test trade here in the ZN, because it does kind of look like there was some decent absorption down there and stuff. Like look a lot traded down there too. So for us to be coming back across this little swing point, in fact, I think we should make this a little bit bigger of a bet. Yeah, how about that? 40 and 40 either way. Oh, by the way, I forgot we did the pull. What was the pull? You guys were 52% up, 48% down, but we were down. So stream was wrong today after 33 votes. It was a close one, though. It was a close one. Should have ended. You should remind me to end the polls at like 8 o'clock or whatever. Did you hear about the woman who lost? Oh, yes, I did see that. I think that the judge came back and rescinded that, though. Schools don't help teaching students that only people in suits are worth anything. For years, dirty jobs have been hard to fill. I don't think that's the fault of schools, though. I think that's a much larger cultural issue. It was something that I saw the other day on TikTok that's kind of related to that I thought was a little shocking, was that there was this person saying, you look like the Walmart budget version of so-and-so. And this girl was like, well, I've never shopped at Walmart, but I bet you have. I'm like, is that an insult? It's an insult that you've shopped at the most popular store in America? Like, okay. Okay. Nothing wrong with Walmart, folks. But some people in liberal cities have real problems with Walmart. They don't like it. They think it's a trashy, awful place. I suppose the Walmart is a little bit less nice than the other stores in my area. Walmart used to be a low class store. I mean, it is a low class store, but it's also like an all class store. Like, you know why you go to Walmart? Because they have everything you need. Where else are you gonna go that you get? Like Target. I guess you can go to Target. But Target is just the same thing, is just marketed to a higher scale people. There's not much else different about the store. People on smaller towns, it kills main streets. Oh, it totally does. But you know what? Maybe that should happen. I remember when I was living in small towns on my mission, and the town that had a Walmart, that was the town that stuck around because everybody else had to go to the Walmart. And yeah, any other store would basically get destroyed, other than like grocery stores and other places, because you didn't want to have to drive 30 minutes to get to a store. But you think about it, and I think that it makes sense that you should have a store where you should be able to get everything, because those small stores just aren't going to be able to provide as good of a product or as good of a selection. Yeah, exactly. But cheap tube socks, what are you going to do? Support your local Main Street business? No. Yeah, once you started getting Walmart, Shopko, and then Walmart, it's a better shopping experience, guys. It's a better shopping experience. Well, they kind of passed the 4,500 and it started to look good for a second, and then they've turned back down and the Treasury doesn't seem to care. Is the Treasury steepening here? Not sure. It looks like it might it might have flattened a tick. Well, you know what? As of late, when we end the stream, it's usually like, well, there's nothing interesting going on anyways. But now, this is like, it seems like we're going to have to end just as it's getting interesting. Don't you want to buy dip? Huh? I don't know. It might bounce there if they could prevent another new low. Well, even if they got another new low, that might make a good bounce. I don't know. That's a lot of volume on the downside, though. Funny story about Sam Walton. When he was doing an interview, all he wanted to talk about was his dog, and he had a picture of them behind us. So what kind of dogs did he have? I don't know, guys. It kind of looks to me like buy the dip doesn't work anymore. Hey, it wants to sell again, huh? Well, that one's going to stop out for sure, right? Oh, 44.86. I wouldn't be surprised to see 44.86. Fact. Let's just kill this. All right. I'll do one there. Short. Do one there. If it comes back, I'll do another one. Dude, this is crazy. It's actually fairly mild downtrend, I feel. Curious that the Treasury's come back, though. You're not seeing flight into the 6J. That's probably why the Treasury's doing that. Let's move that one to there. Driven by what, though? Well, so I think there's a couple of things going on here. One is concerns about stagflation and supply chain issues that continue to be an issue. Just general overall bearishness that we've gotten from the Delta variant, right? And seasonals are, we tend to go down September through October. And the other thing is that the credit impulses are decreasing. So you don't have as much central bank money out there. Even though the Federal Reserve hasn't tapered asset purchases yet, there's less credit out there in general. And so that might be causing them to come back a little bit. That's why I keep pointing out to you. Geez, this one looks like it's bad, but we'll give this 100. Oh, geez, I don't have the... Okay, there we go. We'll stop this out at 100. See, over here in the treasury, I tend to have a pretty good knack for like where it could flip and trying to get a good position and stuff, or even trying to get a balanced position. But in the E-mini, no, it seems like I just always pick the wrong spot. There was a while where I was doing really good, but now as of late, I got nothing. Yeah, look at that. And isn't it classic that it's like as soon as I give up on it, now they're gonna buy the dip? Well, you know, the treasury is recovering there. That could be a reason to buy the dip, right? Try one more. Oh, I gotta get going. You know what, guys? I gotta get going. What should we put in today? Bearishness, risk off sentiment. Risk off sentiment. Is jobs openings surprise. Loads of it, heaps of it. Did you make money, dude? That's good if you made money. I mean, technically, I made a little bit of money. Is that only your second week trading the E-mini? Well, I tell you what, if you can get a position, you can get it to run, it can be really great. But you can also be like me and just get chopped up. Like what's going on right now is like, maybe it's going to go up and maybe it's going to go down, but you're just going to get volatility. You just get diced, right? It's usually better to just be short and catch the short. Trying to like dip by and some of that stuff is a little bit more difficult from a scalping perspective, at least. Okay, guys, I gotta get going. I will see you tomorrow. Tomorrow should be interesting with the jobless claims. I think I'm going to, I'll manage this 10-year position, but I am going to try and keep this steepener on. So we'll see. Anyways, I'll see you tomorrow. In the meantime, stay profitable.